Hi, my name is Rebecca Fannin. I'm the host of our show, Silicon Dragon Talk. So Gary and Chris, thank you very much for being here. Today there's so much news already. September has kicked into high gear. There's a lot of tech news. Alibaba IPO is coming up very soon. Apple made some big news yesterday with its new tech gear. But let's jump into what's happening with Alibaba. What do you think the prospects are for Alibaba to have a successful IPO in New York? I think it's going to go September 19th now, price on the 18th, and go on the 19th. And what do you think the prospects are for its success, and would you invest?
Yeah, Chris, do you want to go first?
Oh, after you, please.
Okay. So I wouldn't invest, but part of that is simply I think they've priced all the value into the IPO price. I don't really think an investor, if you want to make 5 or 10% return, you're going to be looking at a stock that's going to have to be in the 185 to 100 to 200 billion dollar range, and I'm not sure that the company has earned that valuation yet. I also have to say that I was disappointed when Ali went through the process and decided not to be more transparent in their governance, not to be more transparent in how they handle their internal investment process. And I think that they could have raised a bar for all Chinese companies and really established a new benchmark of excellent governance, excellent example of governance. And they chose not to do that. And so I'm a little bit disappointed in that from a governance perspective. And I think that at this point in time, I think you want to wait to buy the stock.
Wait to buy the stock. I'm actually surprised to hear you say that, Gary. I would think that you as a China investor would be really gung-ho about Alibaba, because it's going to set the stage for a lot of other startups from China.
So let's be clear. So when they're pricing at 160 to 170 billion dollars, they've already done enough to help all the other startups. You know, we have several companies. Everyone I think has companies in the queue waiting for Ali to go out so that they can follow. But if the IPO fails, then I think there may be some backlash. Just as when the Facebook IPO failed, a year and a half, 2 years ago. That clearly had an impact on the overall tech market for an extended period of time.
Right.
And so it just strikes me that, in my opinion, they've priced this in a fairly rich way. I was at SoftBank when SoftBank made the original $20 million investment in Alibaba. So for Ali itself and for SoftBank, I'm ecstatic. But if I'm an investor looking at it just as a new purchase today, am I excited about this price? And I would say no. Okay.
Short term or long term, do you think it's going to?
We'll see. They'll earn it. They'll earn it one way or the other.
Okay. Chris, what do you think?
Well,
you're an active investor in China and here in Silicon Valley.
Yes, and we've also had a couple of our companies either being invested or acquired by Alibaba. I would actually echo most of the things that Gary said. That doesn't mean it's not going to be a very successful IPO. I think the American market is kind of hungry, within inverted commas, at the moment for such a big story coming out of China. There have been a dozen IPOs from China this year alone already, but nowhere near this level of scale. And to see one of the top 3 Chinese internet companies in the top 10 globally at the moment is a Chinese internet company finding its rightful place in the big scheme of things in the world. So I think it's going to be a successful IPO. It certainly has all the hype around it, but I'm also not sure I would be purchasing Alibaba stock personally. And I kind of split the risks between their domestic market situation and also what they're supposed to be wanting to do overseas. And on both cases, actually, there are a lot more risks and dangers for Alibaba in the coming months and years than actually promise that has not already been factored in to the price, like Gary is saying. On the domestic front, everybody's out there right now to erode Alibaba's market share. It's the only thing that has brought in Baidu and Tencent together in the last couple of weeks, and I think they still, they cannot show any form of complacency for their domestic China market. Overseas, if you try to analyze the investments and the acquisitions that they have made in the past year or year and a half, you also don't get exactly a sense of a very coherent strategy. And they haven't been clear, both in public and I'm not sure they've been even clear internally about what exactly is their overseas business development strategy in the coming months. It is rumored that Jack Ma stepped down for his role precisely to take over the overseas expansion planning and execution role. We will see if that is accurate or not. But the way they have been splashing cash in the last few months on several investments and acquisitions, for me, doesn't signify a very clear and coherent strategy. And I'm not sure we have the time to go into one by one all these investments. Probably it's not the point of today's discussion. But you can juxtapose their investment strategy with Tencent's investment strategy abroad, and I think you will see a very clear difference.
I think actually what Chris says is correct. The other point would be, if you look at who they're hiring as they go overseas, they have not made the decision yet to hire the best possible people they can. They've hired people that they're comfortable with, but they haven't hired the people that would stand out like a Hugo Barra did for Xiaomi, where you're like, wow, that's really someone who is at a level where every tech company on the planet probably would have been interested in having Hugo work for them. You know, Alibaba has not yet made that decision, and if they really want to be a global company, they're going to have to overcome some of that reluctance to step outside their comfort zone of what makes them comfortable in China in order to be more successful overseas.
So you mentioned the governance issues as well. So it seems that Alibaba is really trying to maintain tight control over the company going forward.
Well, certainly that group, the founding group, the 21 founders.
Right.
I think Jack, Ma, and Joe Tsai were very clear in the roadshow, very clear with SoftBank and Yahoo as investors, that was very, very important to them. I still think they could have done a little bit more on the transparency to make this a real global governance company. We'll see if the governance becomes an issue. If they have the 10 years post IPO that Google's had, then you're going to say you didn't need to worry about it because Google really has managed themselves in an exemplary way. We'll have to see if Alibaba manages itself the same way.
Well, what are the specific China risks involved with the Alibaba IPO? I mean, you were talking about the VIE structure and the management committee having control over board appointments and other issues as well. What do you see as the biggest risk for Alibaba going forward?
Well, I think, to comment first, I think one of the points Chris made, which is their market share almost by default has to go down in e-commerce. There are more and more stronger players. Jingdong has come out, had a successful public offering, and a number of Alibaba's larger merchants have now spun off because as Alibaba is trying to grow, increasing their fees, these merchants say, well, you're now pushing us to a fee structure where it makes sense to maybe try to do this on our own. And some of them have been very successful in doing that. So I think the e-commerce wave that they were at the front of has carried them a long way. But I do think that from an execution perspective, they now have a battle where some of their stronger elements within the Alibaba universe will have an incentive to move away, have an incentive to become more independent. And I think we're seeing that with some of the Qiming portfolio companies. Alibaba, very interestingly, if you are an Alibaba or a Tmall client, if you leave Tmall, you go do it on your own, they'll cut you off from Alipay. That would be expressly illegal in the United States. So that's a great example, one of those things where, are you going to behave like a pure Chinese company, or are you going to behave to an international standard? Again, we'll have to see.
Looking beyond the IPO, with Yahoo's involvement with the IPO, what do you think is going to happen to Yahoo as a result of this massive public offering coming up?
Well, I think for Yahoo and SoftBank in particular, they're the two largest shareholders. I think everything's priced into their stock now. So now that they've set a price, I think SoftBank stock will continue to trade in this range. I was talking to a bunch of large mutual fund guys today. They have SoftBank priced. They had SoftBank priced pretty much exactly where it is for the last period of time in terms of their targets. So I think until the IPO completes, and then assuming that this price is fair, even post that, until there's some news, I don't really, from Alibaba, I don't think there's really any change for either Yahoo or SoftBank. Yahoo's being handled a very large amount of money, and then the question is going to be, what are you going to do with it? So that's a question for Ms. Meyer as she thinks about what to do with the company going forward.
Yeah, any recommendations?
No, that's her problem, not my problem.
And on that note, thank you very much, Gary and Chris, for being here today on Silicon Dragon Talk.
Pleasure.
And,
our pleasure.
We'll see you next time.
Thank you.
Thank you so much.
Thanks.